What is going on, ladies and gentlemen? I am not a financial advisor. This is not financial advice. If you want to watch my live streams every single day, literally teach in live time and also give a few signals, I try not to, but I still do somehow. Then click the WAP link in the description below. And then if you want to use a prop firm, I strongly suggest buying a few Apex accounts. They have a 71% off sale right now. Just use the link in the description, use my code, and those should be good to go. I know there's like a limit on them a couple days ago, but I think they're good now. So click that link if you want to. Again, there's really good practice strategies on those if you want. So that's what I do, at least. So this video has been long awaited. I've been wanting to make this for a while, but I'm gonna be showing you why I do not like the 2022 model. Okay, now listen, this is gonna be a video that is going to both help you find better 2022 models if you're a 2022 model trader, or it's going to help you not take bad 2022 models. Okay, it's not a video to say do not use the 2022 model, because that's not what I'm saying at all. I'm literally saying like it's a good model if you know what you're doing, and there's just a few things I don't like about it. Okay, yeah, so let me go over it. So the 2022 models, we all know, it's just, again, you're looking for some sort of previous day high, previous day low, or some sort of high, and you're looking for something like this, okay, where we get some sort of higher low, and then we break the higher low, and then retracing the fair value gap. And the problem I have with this is a lot of newer traders are going to see this as a pattern. Okay, this is not a pattern at all. Okay, because there's going to be outside factors that will not cause us to reverse here, and we'll literally just keep going up, and we will not go down. Okay, and this is why I don't like it, because there's so many patterns that look like this that just don't work. Okay, so like let me just show you an example real quick. Okay, so on the hourly chart, okay, I did not pre-plan this video. I'll show you how easy I can find this. Okay, let me just show you very good example. Okay, so there's a high inside of a fair value gap right here. Okay, and there's a fair value gap. So you would think, okay, well, we just hit a high inside of a fair value gap. You think we should get a 2022 model that should work to the downside. Okay, so let's see. Okay, if we go to this higher time frame zone, do you see the 2022 model here? Yes, you do. You see a clear market structure shift. Okay, this is the pattern I just pointed out to you guys because we just broke a high. Okay, I'm not sure exactly where the high was. It was right here. So we took out this high. There's a clear market structure shift with a clear bearish fair value gap. Okay, and what happens? It fails. Like, why does this happen? You're probably wondering, like, why does this happen? Okay, this is just it's something that took me screen time to figure out. Okay, well, the first thing I see here is this really a market structure shift, or is this really a liquidity sweep? Okay, well, when you look at, again, I'm not going to be able to explain like every single little thing I look for in a 2022 model, but one thing I do look for is I do not like when a market structure shift is equal lows or equal highs. If we break equal lows, equal highs, which as you can clearly see these are, I do not like it. Okay, that's the first thing. The other thing I don't like about this is we are delivering from a bullish or value gap. So at this point in time, it's like, oh, this is 50-50. We could reject here or just keep going up to liquidity because technically we're delivering from here. Even though we did take out a major high, okay, and this high was from, it was like the previous day PM session high, okay, as you guys can see, it might have been the high day. Yeah, it was the high day. Like, even though we took it, this is still not a good play to me because it's like we're delivering off of this. And there's so many factors you have to take into account when taking a proper 2022 model, when a lot of people think it's literally just a pattern. Okay, it's not a pattern. So if we go into replay mode, okay, you can look. Like, if we're in live time here, you see a high, okay, you see an obvious hourly fair value gap above it, okay, and you can see, let's look for the pattern I just pointed out, okay. Okay, not yet. So let's look for a higher low, okay. There's our higher low, okay, makes equal lows. We break the higher low. This is where the ICT trader is like, oh, here's the 2022 model, obvious pattern. But from my experience, like, just this one wouldn't be good because, one, we're delivering off a bullish fair value gap, and two, there's another outside factor. I know it looks perfect from like this point of view. Okay, I know it looks perfect. There's a kind of another liquidity sweep here, but the thing with the 2022 model is if you do not have the draw on liquidity right, you will get wrecked. And I ended up longing this because again, I know at the time we had not even closed above this hourly fair value gap yet. Because this is replay mode, it looks like we did, but we had not. But you got to realize, like, from the higher time frame here, we were delivering from a daily fair value gap. Okay, so and we see how close we came to buy set up here, but then it hit it. Like, we were delivering from there. There was an SMT with the S here, and there still is. Okay, see how NQ makes a lower low, and if you look at the daily of yes, look at this. We made a higher high. Okay, so SMT there. And you're probably like, well, how are you supposed to know all this stuff? Okay, well, let me tell you the hard truth. A lot of new traders, they're not going to remember all this stuff. Like, I've been doing this for so long where I see this stuff. Okay, and that's why I think the 2022 model is the hardest to learn for newer traders, because they'll miss stuff like these and they'll get caught in these bad setups and take retracements like this because of that reason when they're drawing liquidity so wrong. So even though it looked like this was a textbook 2022 model, it wasn't, because there was no, like, there's just, you have to look for SMTs, you have to look for higher time frame draw. Like, the obvious thing for this was there was a big SMT, and that was a big one there. Okay, so that was the first example. So, like, I'll show you an example of one I do like, okay, which happened on Friday. So on Friday, if we go to ES, okay, and NQ, we had a clear BPR right here. And see how we already kind of tested it once and we formed a high inside of here? Okay, well, these highs inside of these BPRs are pretty good liquidity points, okay, pretty good liquidity pools. So when I'm looking for the 2022 model, at that point, I'm still bullish here. Like, I'm still bullish because just of what I said earlier. Like, we came really close to this, but didn't hit it. So I'm still bullish here. However, from a larger time frame perspective, we just had pumped, like, I don't even know, like, from NFP, we just pumped like 100 points, okay, 150 points. So I'm like, okay, well, we just pumped all that much. Even if we don't get a 2022 model here, I'm looking for a retracement, okay? Okay, so like in this example right here, why is this a better 2022 model? Well, the way I look at the market is I look at inversions. And to me, this is literally, to me, this is objective. Okay, you can see we are violating this. You can see, like, we kind of barely hold it, and then boom, look what happens. Big red candle right here, just totally violates this. And at the same time, okay, on ES, okay, at the same time, if you go to the 1 minute, okay, another one right here, okay, we clearly violate this big red candle through what should hold if the bias is bullish, and we go through it. And at the same time, there's a bearish SMT. Okay, and at the same time, okay, this is going to be important too. Look at, okay, we barely take this high. So even though the bias might still be bullish, this is a 2022 model that has like more confluences. There's an SMT, okay, ES made a lower low, and NQ made a higher high, okay. And a new trader is not going to understand this. They're going to be like, they're going to take this every time. They're going to take this same thing every time. I guarantee you, you see it every day and you take it. And sometimes it's going to work, sometimes it's not, okay? And you're on Friday, if you're watching this video and you took this, you're probably like, well, why did this work? And why didn't the other short I showed you guys work? Okay, well, there's so many different factors. There's time. There's like, okay, is it in that 10 o'clock time period where we typically reverse? Or do we need a pullback? Are we in premium? Like, there's so many different factors. So why I like inversions better is because this is so objective. Like, you can clearly see we violate it, versus a market structure shift can be subjective. Like, some people might classify this as a market structure shift. Some people might classify this as a market structure shift. So it just really depends. Okay, but with a fair value gap being violated, that's more objective, and that's why I like it so much better. So again, there's going to be a lot of 2022 models like that are going to look good, and some are going to fail, some are going to work. Okay, like this one. Okay, this really isn't one because there's no market structure shift, but other ICT traders might classify this as a market structure shift because there's probably a really key market structure shift in the 30-second time frame. Okay, if I go into replay mode, let's see if there's a clear one. Yeah, so on the 30-second, there's a market structure shift here, but on like the 3-minute or higher, like, can you really see a market structure shift here? No. Okay, so a fair value gap getting violated is a lot more subjective. You can clearly see, like, oh, if we violate this, we're bullish, okay, to the next high. right? And you can see it in the chart, but there's going to be a lot of different opinions about different 2022 models, different market structure shifts. Some people might consider this a market structure shift, some people might not, and that's where I don't really like it. Okay, so again, this is just a little video explaining why. Again, this is like the best 2022 model you'll see when it's combined with the FEG violation as well. Those are like very key. Versus the first example I showed you guys, like we didn't really. If I go back to the 1 minute, right, where was it? Let me just go to the hour really quick. If I go back to the other example over here, we never really violated that fair value gap, did we? Okay, look at this. Right? Maybe if we got the 2022 model and then violated this as well, I would have taken it, but we didn't really violate this. And I'm not trying to guess that we are going to violate this. Okay, this is just not a good idea. So, that's, again, there's a lot of different rules. I think the main ones I have is for the 2022 models. Make sure we're not delivering from another PD array, like mainly a fair value gap. But if it's an order block, I don't really care. But make sure we're not delivering from another PD array. And then make sure there's no equal highs above if you're shorting. Make sure there's no equal lows below if you're longing. And I mean like really perfect equal lows. Like if we were to get something like this, okay. The only exception of this is if there's like an SMT, but obviously this is not an SMT. So if there's a bullish SMT, I wouldn't really worry about these lows. And then my other rule is make sure you're going with the higher time frame narrative. And obviously the higher time frame narrative here was bullish because we were delivering. This is a giant daily fair value gap, so it only makes sense for us to go up here. So again, there's a lot of different rules. You're gonna have to learn them yourself. I'm not gonna be able to tell you all of them, but you're gonna find these little things like time. Okay, if we get a 2022 model at 10 o'clock versus if we get it at 12:30, it's more likely to work at 10 o'clock than 12:30. So I hope you guys enjoyed this video. Let me know if you have any questions. Again, I just want to give my thoughts on this, maybe show you some good and bad examples. I'll probably maybe do another video on this in the future, going over some more examples, but just wanted to give you my thoughts. And yeah, that's all I got for today. Hope you guys enjoyed this video, and yeah, peace.